Did you know? The South African Reserve Bank, SARB, is the oldest central bank in Africa. It was established on June 30, 1921. Prior to this, South Africa had no monetary authority, and it was the responsibility of commercial banks to bring notes into circulation. It was only because of arbitrage that the SARB came into existence. The price of gold in the United Kingdom rose, and a profit could be realized by converting the banknotes back into gold in South Africa, and then selling that gold in London, forcing local commercial banks to sell their gold and re-import them at a higher price. Banks in South Africa were eventually released from their obligation to convert their banknotes into gold on demand. It then became the responsibility of the central bank, SARB, to hold commercial banks' gold and issue banknotes. This was known as the Currency and Banking Act of 1920, and this is what led to the establishment of the SARB. By 1932, South Africa completely abandoned the gold standard, choosing rather to link the value of the local currency to the pound sterling, making this the new monetary policy framework of this era. It was only in 1944 when the South African Reserve Bank Act replaced the Currency and Banking Act of 1920, and the SARB's initial 25-year period of issuing banknotes was extended indefinitely. On the 14th of February 1961, South Africa introduced the rand just 3 months before it left the Commonwealth to become a republic. The rand replaced the South African pound at a rate of 2 rands to 1 pound. Fast forward to 1985. South Africa was experiencing massive capital outflows from debt defaults and economic sanctions. Thus, exchange controls were implemented, creating the dual rand system. These exchange controls set one exchange rate for current account payments for residents and another rate for capital account payments for non-residents. This meant that all foreign investment in South Africa could only be sold for rands. The dual system was eventually abolished in 1995, and a new monetary era was ushered in to represent a post-apartheid regime. The South African Reserve Bank Act 90 of 1989 now replaced the SARB Act of 1944, and the SARB's mandate and primary goal now became to protect the value of the currency and to achieve and maintain price stability. The era of 2000 to 2023. South Africa becomes the 13th country to adopt an inflation-targeting monetary policy framework in 2000, with the aim of keeping consumer inflation between 3% and 6%. It is only now in a post-pandemic world where the central bank has introduced new banknotes into circulation as of May 2023, setting the scene for the next chapter of monetary policy framework. The now primary object of the South African Reserve Bank is to protect the value of the currency in the interest of balanced and sustainable economic growth in the Republic.